Good afternoon, everyone, and welcome to Stock Market Today on this Friday. You have Alyssa Corum, and I'm joined by Ed Carson. We're going to do a deep dive, a technical look on the market action this week, a very wild week on Wall Street, as well as a couple of stocks that we're going to be taking a look at Taiwan Semiconductor and Intuitive Surgical, two stocks that held up on this wild Friday. But first, we're going to take a look at the major indexes, starting off with a chart of the Nasdaq, and we're going to be looking at the candlestick chart. We saw the tech heavy index closing down 1.3% for the day, well off of the intraday lows. The S&P 500 down 0.8%, and the Dow down 0.6%. So Ed, what do you make of this week? I mean, when you just look at this chart, this week definitely stands out. And we have you on mute. But it was a huge down week. Luckily, we did get a little bit of a bounce there at the end, but still some heavy losses. You're still on mute. Looks like I'm still seeing Ed.
Yeah, I'm sorry about that.
There he is.
I just could not get, the buttons all went away. So
we're back.
I was a little out of character. I try to not do that, but this was an out of character week for sure.
Yeah, there you go.
We've been warning for several over the past week that we were sort of looking extended on various measures. And then on Wednesday, we got right up to the top of this standard deviation line on this regression line. And so it was really a sign that, hey, you might have wanted to sell into strength. And then on Thursday, boy, it came. It really came hard. We sold off down to the bottom of this, this standard deviation. All of a sudden, just in one fell swoop, came to the 21-day line. And then today, that was pretty wild intraday action. We came almost all the way down to the 50-day line, and then really paired losses. Looked for a while there like the Nasdaq was going to turn positive. So, it was definitely a change in character. A lot of growth stocks came under heavy pressure. Yeah, some of them came back. Some of them even closed positive today. But it's something that I think that traders need to take note. The direction looks like we may be in flux in the short run.
Yeah, that's right. And such a good point that you make about where we were earlier in the week. We were kind of getting those glimmers of the euphoria and getting extended above that half standard deviation, above the regression line. As you mentioned, that was our signal. Be on guard, start looking to trim, take some profits. And then where we finished this week, positive to see that support at the 50-day, well off of the lows, but definitely a violent move down, impacting a lot of the charts of a lot of the leading stocks that we've been looking at this whole rally. But I guess quickly, but before we move on to some other things that we want to talk about here, what do you make of the turnaround, I guess you could say, in stocks like Apple, like Tesla, ones that had run up so much in recent weeks on their stock split news, came looking like they were crashing back down, but a little bit of strength coming into those names late Friday.
Well, we'll look into this. The 50-day line was just a natural area of support, so it was nice to see that. It's not surprising to see at least some surprise. And actually, we've done that a number of times, maybe not all the way to the 50-day line. We've had a lot of 1- and 2-day pullbacks or 3-day pullbacks. And that's just been the character of this rally. It's really amazing how well it's done. There's no guarantee it'll continue. It would probably be great if we could move sideways and treat this area as sort of a range for a while. But the stock market rally is going to do what it's going to do. We're sort of in the middle of the range for the week, the last couple of days. So it's not clear which way it's going to go. It's going to be a long weekend. So it'll be interesting for, if you're sitting on a lot of positions, you might be a little bit nervous heading into what are we going to come out of, but
Right.
Just an amazing week.
And this pain, yeah, go ahead.
I was going to say the Webby's RSI was measuring where we were on the 21-day. This was a yellow alert, getting to these yellow line because we were getting up about 4%. Webby's RSI basically just measures where the bottom of the Nasdaq, the low of the day versus the 21-day line. And we were getting up to this area, and this late into a rally, that was getting a little bit, that was just another negative sign. But now it's back to zero because we're actually closing below the 21-day line. So that's off the table, but that was something there. if we did rally straight back, and I guess we can go to a weekly now, if we did go straight back, there's not that much room before we'd get back up there. So that's a concern, is that you could say, well, maybe we've bottomed, but there was a lot of situations, and I'll show this on a MarketSmith chart, where we went up and then we went down and then we went right back up and down again.
Right. And this chart is a really great visual of the rate of ascent that we have seen in this rally. We've been talking how it's been looking like a little unsustainable. So as painful as a week like this week is, it was not all too unexpected from us. And actually, Chris was mentioning on IBD Live that it would be healthy coming down to that 50-day. But like you said, we'll have to see what next week brings. But this week definitely looks out of character. Again, this is a theme here for our analysis this week, a week that is out of character from what we've seen in this rally so far.
Absolutely. All right, let's see if I can switch us over to something else now.
Yeah, that's right. So next, we're going to take a look at MarketSmith, right, Ed?
Yes, and this is a daily chart of the NASDAQ. So back to this. Go ahead.
No, go ahead with your analysis. So this is just a different view. We're looking at the high-low close now instead of the candlesticks. You can see the NASDAQ closing well off of the lows, but still below that 21-day. Now, walk us through the different levels that you have drawn on there that you talked a little bit about this morning on IBD Live.
Yeah, I mean, in some of these situations, we form these little consolidations, and like, here's a situation where we fell to the 21-day line, came back up, but because we were sort of getting near those a little too fast, we came back down again. But this was a little area of consolidation, this whole area, whether you want to draw it here or here. And then we did another one of those situations, and the bottom of this consolidation was basically testing the high here. And if you look today, like, we ran up quite a ways here because of those stock splits and Salesforce and Zoom, we just kept on surging. Basically, we came down to this area. We're testing this top of this consolidation. Just another reason why you might expect to find support here. But it's also, if we did run up again, we have a history of doing that and then having to come back down again somewhat. So that's one reason why you have to be cautious about new purchases, in the short run right now.
That's right. And if we could take a look at the monthly of the NASDAQ just really quickly, because we've been checking in on this one as well. You had that nice trend line there drawn showing how we were getting over this long-term channel line already.
Yeah, at the very lows of the day, we were basically back to right on the top of that line. It's just unlikely to be able to maintain that for long. There's not many examples. I mean, you can look back to 1999 maybe, but it's hard, breaking a long-term trend line with such acceleration seems unlikely to continue, that ultimately would need to come down. So that's just another reason why you might expect the rally to moderate, because this is just, you don't see this. You can see how other rallies are, much more shallow after a time. We surged here, but then we there's different places where it's moderate. This is just really, really steep. And to keep on doing that month after month. So to moderate, come back under this monthly line would be more sustainable and just be something. So more room for the NASDAQ to run, room for your leaders to run. So that's what we'd be looking for.
Yeah. And the silver lining of weeks like this is that we will eventually get those new setups and those new buy points for leading stocks. But so we're going to keep an eye and to keep our watch lists up to date. But let's check in on the S&P. That was a deep dive of the NASDAQ, looking at a bunch of different time frames and technical levels. But Ed, give us a little bit of an update, if you could, on the spiders, SPY, the ETF tracking the S&P 500. How is that looking this week? Because it too was in new highs and starting to get a little extended earlier in the week.
Yeah, the S&P tends to not be as extended from the 50-day line because it's a little more mix of growth and non-growth. But obviously some of those big names like Apple and Amazon and Microsoft, Facebook, all those things were surging in recent months. So it was getting sort of extended as well. And so it pulled back again, like the NASDAQ closing around the 21-day line. It's just something to watch. It's even today, it's like, it's still 4% above the 50-day line. It could easily come back down to that. It's just that, even the S&P 500, which you would think is not as momentum and not as much speed, it was getting a little extended. We were just getting a little frothy. If we can go
Mhm.
sideways for a while, that would just be ideal for a while. We've had a lot of gains. It'd be great to have a chance for stocks to set up again and form new bases. And there are some that are holding up reasonably well.
Yeah, and we'll get to those in a minute. But first, let's kind of digest all of this information and put it into action for investors for their battle plan for the week. What would you want to be doing to position yourself? It's a 3-day weekend, so come Tuesday, and also over the weekend. When you're doing your weekend routine. What are you thinking about as an investor? This is clearly a little bit of a change in the tone here, to say the least. So grading your stocks is something that seems like a good idea at this point.
Yeah, you want to continually be grading your stocks. And if you didn't lighten up much, you really should be trying to think about how exposed you want to be, because the thing is that you want to make the trend your friend, but you don't know what the trend is. We've had a couple of, you know, pretty big wild days. We've come off highs. We don't know if we're going back up. Even if we did, how long that would be. So grade your stocks. You may want to trim some, decide which stocks that you really are big, that you really believe in, you've got big gains in. You can hold those, continue to hold those, but not be too exposed overall if the market does come back, which is still a decent possibility. And it's just, you're not the one trying to fight against and make the market go up. You want to ride the trend, not, you can't make it. You don't want to try to actually be a hero. You want to
Mhm.
just like ride along with an uptrend. It's just so much easier to do that. So
Right.
check out grade your best stocks, go through watch lists, look for the stocks that are holding up well. It's not necessarily the bases are, a lot of them are wrecked up right now. So you're not going to find tons of stocks that are like actionable, but look for stocks that are pulling back, maybe holding up maybe reasonably well, relative strength lines rising or at least holding steady. Maybe, trading relatively tightly, pulling back to the 50-day line, but not, diving to it. And those are the kind of things that maybe they'll form setups or they'll find bullish actions when the market clearly is looking positive again.
Yeah, and speaking of stocks for your watch list, some names that held up better than others. We're going to check in on Taiwan Semiconductor and Intuitive Surgical. So first up, Taiwan Semi, ticker TSM today. It did decline a little, over 2% or so, but held up much better than a lot of other stocks did in the last couple of sessions, Ed.
Yeah, and Taiwan Semi, it was a real jump on, its earnings, a really strong move here. So it's been consolidating well. On a weekly, it looks really tight. You almost you wouldn't know that a wild, crazy week ensued. I mean, this is just looks like just another week, and in another week, it would have a flat base. If you really were lucky, you could see this moving along sideways, and in a couple of weeks, the 10-week line would come up and provide additional support. So this is acting very well. It's, again, you want to be seeing the market show clear positive action, because holding up reasonably well, it may be relatively doing well, but you don't want to, if the market goes down, this is likely to go down too. So it's not like you don't want to be buying in now, but it's the kind of stock you want to be looking at, because this is setting up very nicely.
And also, I like the point that you're making about looking at these stocks on a weekly chart, because this week is going to really impact the look of a lot of the stocks that we're taking a look at. So whether it's stocks for your watch list or stocks that you're owning, look at those weekly charts. Look for those sell signals too that present themselves on the weekly chart as well. And last but not least, let's check in on Intuitive Surgical. That stock dipping, it looks like less than 1% today, holding its 10-day moving average, if you can believe it. Pretty
Yeah, I mean,
impressive.
it was really just taken off, had just a series of days on this breakout, kept on moving, kept on moving. Yeah, it paired gains, but it was still up for the week. This is the buy point 704.10, 10 cents above that area. It was a nice tight action right above this breakout. This one you would think might be, it's a growth stock. I mean, yeah, it had these terrible numbers here because everybody stopped using, doing surgeries during the coronavirus pandemic. But the growth story is still intact. People see real rebound next year. Relative strength line is at a new high, and it's a situation. Maybe it's a growth stock that may not be as affected by a tech-led sell-off, and it's not going to be immune to it. There's really, all the stocks seem to get hit, but this is one that's been doing very well. It's actually still in buy zone. Probably don't want to be buying right now. You want to
Mhm.
see things shake out, but it's definitely one you just want to keep a close eye on.
Yeah, when the market does come under selling pressure, that's not the time to be aggressively buying stocks. There are, believe it or not, talking heads out there that like buying on big down days like this, but we prefer, like you said, trade with the trend, buying into strength. Waiting for those moves higher. If you're going to do that, you don't want to be trying to catch a falling knife here.
Yeah, there's no point in trying to guess the absolute lowest price. I mean, somebody gets that low tick and then look at me, I bought it right here. But so often you're going to end up, you buy the low tick, it goes up for 10 seconds and then it reverses lower. You just ride the trend. And that's why you just want to be paying close attention. You really want to stay engaged, keep a close eye on your portfolio, look for new stocks that are setting up. And then as the market does, whether it's in a week from now or a month from now or 2 months from now, the market really shows a strong trend again, you're ready to act decisively again.
That's right. And the best way to stay in step with the market is by watching this show every day and also tuning into IB Live each morning. That's our daily morning live stream where experts are sharing their screens, talking to you about what they are doing in the changing market conditions. We were talking earlier this week about hedging, about trimming, about getting a little cautious. So we will continue to monitor the market conditions very closely each and every step of the way, and take a look at more watch list stocks and be ready for when market conditions do improve. We're going to stay flexible.
Absolutely.
All right, everyone. Thanks so much for watching, and we'll see you right back here on Tuesday.